Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Thursday, 23rd day of June 2016, and this is the Daily Report for Gold and Silver. We are going to combine gold forecast and trending markets today. We have seen some real fireworks, real activity. Precious metals, specifically gold, under pressure, now trading near the lows, down about $7 at $12.58. Low today, $12.54, high $12.71. Equities markets beginning in Europe really taking off. Take a look at the Dow Jones Industrial, 18,011, putting it up about 230 points. In fact, S&P futures were trading dramatically higher before the open of the market. As you can see, we are above 2,100 at 2104. And silver managed to eke out a small gain, trading up about 8-9 cents on the day at 17.31. So traders, as you know, we have been sidelined from all active trades, having pulled profit on gold at roughly $12.90 just a few days ago. Market currently trading at about $12.60. On today's report, I do want to take a look at where I believe we should find support and our strategy for our next trade in gold. Also want to take a look at the equities markets and, time permitting, some of the currencies. Absolute fireworks today as the markets have absolutely come under the assumption that Britain is not going to leave the European Union. The Brits have voted, but they haven't tallied the votes as of yet. So there's still some uncertainty, but at least in terms of market sentiment, there is absolutely no doubt that the majority of traders and investors are in essence looking for Britain to stay the course, so to speak. Now, one of the things that we have been looking at in terms of our current flat position was the fact that we pulled profits, and we pulled profits, as I said, roughly at about $12.90 after getting in at about $12.45. It is my current belief that we are at the tail end of our correction. And in terms of our current Elliott wave count, the way that I'm looking at it is follows. The rally, which began end of last year, beginning of this year, completed a wave one, taking us up to roughly about $12.90 in terms of the market. We then went into a correction. It was an irregular correction, an ABC correction. The reason we call it an irregular is the high of B is above the high of the rally conclusion of A. From there, I believe we concluded our wave two and are now going into an impulse wave three. As you know, in terms of our long strategy, I am looking for the market to inevitably trade to about 14 to 14.50 per ounce. And we were able to really manage to get a nice trade under our belts, getting in right here. And as I said, getting out near the top of the market. Now, my sense is, as I said over the last few days, is once we broke through this 38% retracement, which is roughly 1273, the market really has nowhere to go on a technical basis but to the 61% retracement, which sits at around 1245. So the way our model is looking at the potential bottom for gold, I believe it should occur somewhere between 1245 and 1250. That would complete this second component. This is one of three here. This would be two of three, and we would start a impulse wave, 3 of 3. And of course, that impulse wave, by virtue of it not being the shortest of any of the waves, we could see a pretty tremendous move, considering that wave 1 was a pretty dramatic rise from 1,200 to 1,320, $120 move. So if we do find support at, say, 1245, you've got 1345, 1365. That is where I think we could see this wave 3 conclude. Now, in terms of our strategy, we simply want to look for a solid entry point. And as I said, I would look for the market to test anywhere between 1245 and 1250. So beginning overseas in Europe last night, we had the European equities on an utter tear. trading to the upside and strongly to the upside. We saw the Standard & Poor's follow suit. Futures were trading up roughly about 20 points prior to the open, softened a little bit and then firmed up. As you can see, 2105, this of course is the E-mini, and the high is exactly where we've closed, low 2083. Now, what I find very impressive about today's move on a technical basis, of course, is the fact that we've been looking at this market really consolidating over the last couple of days. You can see that by virtue of these very, very small-bodied candles. And the other thing was that they were just at and slightly above this 50-day moving average. Today, we accelerated above that, and now once again, we're very close to flirting with these record highs at 2117. We are not that many points away from it. We could absolutely see follow through. Now we really need to let the dust settle and see how the vote in Britain actually has unfolded. So as far as the currencies go, a U.S. dollar under pressure off almost a 0.5%, 0.43%, closing at 93.30. I draw your attention to this chart. It is a daily chart. Euro dollar on the bottom, U.S. dollar or dollar index on the top. And you can absolutely see these lows that came in today at around 93. But you have these more recent lows that came in roughly in May, which were at around 92. I personally think if the vote unfolds with Britain staying the course, not leaving the European Union, dollar index will probably come down and test 92. And in terms of the euro, you can see the strength over the last couple of days. I wouldn't be surprised to see it go above 114 and actually test some of these highs at 115 on the euro. Traders, crude light, again, an aggressive move back up over $50 per barrel, a 2% gain on the day, about $1 per barrel, closing at $50.12 per barrel. One of the interesting things that we have noted is this positive correlation which has returned between crude oil prices, that is this candlestick chart on the top, and U.S. equities. We have the E-mini S&P 500 on the bottom. No doubt we've had some dynamic moves to the upside in both oil as well as U.S. equity. And traders, lastly, do want to take a look at gold. This from the vantage point of FX or spot gold. And what is noteworthy on the market, you can see that I have two different moving averages here, and I've just changed the color. This, of course, is our 50-day moving average. We're looking at 1440, so it is a daily chart. And the one thing that we can say is that we have absolutely now broken below the 50-day moving average on the close, and we're currently at, as I said, 1260, roughly in that range. Traders, my recommendation is to continue to be sidelined. We are going to look to move into a long position in gold. Favorable pricing should be anywhere between 1245 and 1250. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.